Hi, this is Dan Collins, live from the Las Vegas Traders Expo, and I'm joined by Sebastian, founder of OptionsPit.com. We'd like to kind of continue a theme we've been talking about recently, and that's volatility. Really good time because we had a huge volatile day in the markets right now. And what we've, if you've seen it, the people who've been at the Las Vegas Traders Expo, when we're talking about options, it's not only about direction or risk management, it's about volatility. And today's traders are becoming a lot more sophisticated in using volatility.
Well, I think they need to be. If you're using options and you're not taking volatility into account, you're basically leaving money on the table. You are just solely guessing on direction, and volatility can really turn a good idea into a bad trade, and luckily for some people, a bad idea into a good trade. So by using volatility, you really put kind of the wind at your back. So if you buy cheap stuff when it's cheap, in the direction you're looking for something to move, you have far better odds of success than buying options when implied volatility is really high. Now, right now, the market is really volatile. And how do I use volatility when I'm looking at the market? The thing I really pay attention to is that relationship between the S&P and the VIX. So the S&P and the VIX are generally negatively correlated about 85% of the time. So when the two of them start to correlate positively, so the S&P is going up and the VIX is going up, that correlation is going to break and they will return to negative correlation. VIX is almost always right and S&P is almost always wrong, and we get a sell-off. And we saw that at the beginning of October.
Yeah, and when you talk about options in general and volatility, it's like a three-dimensional picture rather than a two-dimensional picture, and you're not using options to the full extent unless you can price things on that three-dimensional things and take advantage of that.
Yeah, options are a cube, not a sheet of paper. And most people trade them like they're two-dimensional, right? Just time and direction. They don't really pay attention to the volatility component, the insurance component that's priced into an option, and that's really key. If you haven't spent a lot of time looking into implied volatility and you're an option trader, then you are doing it wrong.
Okay, well, you mentioned VIX. We're going to take a quick break right here, and then we're going to get deeper with Sebastian into how to use VIX and trade volatility.